Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
Hi, it's Whitney Sewell here of LifeBridge Capital. I hope you have had a great week. Here are some highlights that I want to share with you. And also, please like and subscribe. Leave a comment. We'd love to have feedback from you. You can always email us at info@lifebridgecapital.com. We would love to hear other things you would like for us to include in this report so it's better for you as the investor. This week, apartment rent and occupancy hit record highs. White House looks to combat real estate money laundering. Property down payments reach a new record. Remote work and larger homes are driving moves. U.S. job growth stalls. Rise in U.S. house prices to slow down next year. And finally, find out which city will have the highest property price appreciation in 2022. Apartment rents soared to new heights, while occupancy levels set new records in November, demonstrating this year's housing market isn't following typical trends. Rent hikes and occupancy typically taper down in the winter when landlords report lower occupancy and offer incentives to attract renters. According to RealPage, a real estate technology platform, November occupancy in apartments hit a new high of 97.5%, up around 250 basis points from the long-term norm of about 95% going back over the previous 3 decades. In November, the yearly rise in asking rents for new move-in leases reached 13.9%. Even during the later part of the year, renewal lease rent growth has been rising at 8%. So what's driving rental demand then? Analysts attribute it to appreciating prices in the for-sale market, new buyers being pushed out by all-cash investors, and more people choosing to live with roommates. In other news, the Biden administration is now examining the use of all-cash sales for commercial and residential real estate purchases, which it claimed are frequently utilized to hide money. The government is also proposing an expansion of reporting requirements for all-cash purchases of residential real estate worth more than $300,000 in 12 metropolitan areas, as well as a significant increase in financing offered to these types of purchases. According to the Treasury Department's Financial Crimes Enforcement Network, the U.S. real estate market, like many others, has been used as a vehicle for money laundering, and it can encompass companies and professions that aid such purchases in the money laundering process. Before it can devise new rules, the administration wants to hear from the public in order to develop more targeted changes and reduce the burden on the real estate sector. The administration wants to learn what types of real estate require inspection, how much money is required, and where the regulations should be applied. The White House's broader anti-corruption strategy will also include boosting intelligence and diplomatic resources, as well as greater cooperation with foreign governments, particularly in the construction, transportation, and natural resource extraction industries. The national median down payment hit its highest level since at least 2005, according to the ATTOM Data Solutions. The median down payment on a single-family home purchased with financing in the third quarter was $27,500. That is up 41% from $19,502 year over year. The median down payment was $27,500, or 8% of the national median sales price for houses purchased with financing in the third quarter, up from 6.5% a year ago. The San Jose, Sunnyvale, Santa Clara MSA tops the list of metros with the highest median down payments on single-family homes and condos purchased in the third quarter, with $336,700. 4 other MSAs in California made the list, which includes San Francisco, Los Angeles, Oxnard, and San Diego. Remote work is driving demand for larger homes. The fact that Americans are spending more time at home during the pandemic has increased their desire to relocate, according to a poll from StorageUnits.com, a storage facility business. Between March 2020 and October 2021, 37% of about 1,250 people who were interviewed moved into larger homes. In addition, 39% stated that their relocation was prompted by the ability to work remotely. I know we've also personally seen that happen amongst tenants who are moving into our projects from other MSAs. The average price of a new house recently surpassed the median home value for an entire year, according to the latest S&P Case-Shiller home prices indices. The cost of building a single-family home in 2019 is up significantly from 5 years ago, according to the latest Census Bureau data. As reported by the National Association of Home Builders, the median single-family square floor area has increased to 2,337 square feet, and the typical square footage of a new single-family home rose 2,541 square feet during the third quarter. Now, the U.S. job growth is already stalling. According to the payroll report released last week by the U.S. Bureau of Labor Statistics, job growth in the United States has slowed as unemployment levels fall. In November, the economy created 210,000 new jobs, down from a revised 546,000 in October, and below market expectations of 550,000 jobs. Professional business services, transportation, and warehousing, manufacturing, and construction, plus retailing produced most of the employment increases. The unemployment rate decreased to 4.2% from 4.6%, below market expectations of 4.5%, suggesting that labor is in short supply and expanding a 4.8% rise in earnings. According to a recent poll of property experts by Reuters, house prices in the United States will continue to rise at a double-digit pace until 2022, when they will level off and outpace consumer price rises in wages. Property values have exploded following on from extremely low interest rates and demand for bigger houses to allow for home office usage. In addition, the recent volatility in financial markets and the Federal Reserve's early moves to tighten monetary policy sooner than expected are likely to slow price increases over the next year. A lack of new supply will continue to be a major issue in 2022. Inventory levels are only around 1/3 of what is considered optimal. Analysts predict that affordability will become a major issue as many individuals will be priced out of pursuing a home. This will create a surge in rent, especially by millennials looking for single-family properties. And speaking of property values, which housing markets have the highest appreciation in 2022? Second-tier cities that offer greater affordability and more space than the country's largest cities are predicted to experience the greatest price hikes and home sales, according to Realtor.com. But while Salt Lake City is expected to have real estate prices rise by 8.5%, the highest among real estate markets, analysts, however, are surprised that Boise, Idaho ranks second with an estimated 7.9% price increase. With housing scarcity in expensive tech metros like San Francisco, people are flocking to Boise for low-cost lifestyle, which is likely to continue in 2022. Real estate prices in the top markets are predicted to rise 7.4% next year, or more than twice the national pace of 2.9%. With more inventory hitting the market, buyers may benefit in 2022, relieving some of the low stock concerns that hindered home purchases last year, according to the real estate firm. The top 5 list is completed by Spokane, Indianapolis, and Columbus. And that's it for this week's highlights. I hope that you have learned a lot and enjoy these updates. We would like to hear from you at info@lifebridgecapital.com of any changes that we could make, anything that would benefit you as the investor. Please like and subscribe and leave comments. We look forward to working with you at LifeBridge Capital.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.